Now, three of the biggest banks in the United States have warned that the worst of the coronavirus recession is yet to come. In the past 3 months, they've set aside $28 billion to cover losses from loans that might not be repaid. For more, let's speak to our business editor, Stephen Carroll. Stephen, tell us more about the significance of this.
Well, essentially, it tells us how the financial sector is preparing for the impact of this crisis to come down the line. The message from Jamie Dimon, who's the CEO of JP Morgan, is that this is not a normal recession and that the recession part of this crisis is still to come down the road. The danger for banks is that if enormous numbers of people are unable to repay their home loans or businesses are unable to repay their loans, that could create a financial crisis on top of the recession. And that's why banks have been setting aside so much money in staggering amounts to try and prepare for that sort of risk should it materialise down the line. In the past 3 months, we've seen these huge amounts of money being set aside by these three major banks. JP Morgan over 10 billion, Wells Fargo just under 10 billion, Citigroup just under 8 billion. So far, banks have built up total reserves of over $80 billion to cover the eventuality of there being a surge in loans that aren't being repaid. Now, these big banks have a view into really almost every area of the economy because they issue home loans, they issue car loans, they issue loans to businesses, they issue credit cards. So they have a good view on how things are performing, and what we're learning from these huge sums of money that they're setting aside is that they're worried about this crisis getting much worse.
Indeed, they have a view into many sectors of society. So why do you think they're being so downbeat about the future? Any details?
We know the American economy has been very hard hit. Unemployment has surged. There were 40 million people lost their jobs in the United States at the peak of this crisis. The unemployment rate is now over 11%. The bank's view is that the government help that's been put in place for now is cushioning the blow of that crisis. And what they're worried about is what happens when that aid starts to be wound down or phased out. Things like the $600 extra in unemployment benefits that people are getting at the moment because of the pandemic. They're worried about when that money will eventually be wound down by the government and what that will mean for people's households, personal finances, but also business finances. Will there be a wave of bankruptcies and another increase in unemployment? Both Wells Fargo and JP Morgan expect the unemployment rate to remain in double digits until the end of the year. At the start of the year, it was under 4%. So that is a dramatic change in the picture for the American economy. The background to all of this is the increased debt that American households have taken on. Consumer debt in the United States last year reached a record high of over $4 trillion. The main parts of that are actually student debt and car debt, people taking out car loans. And that's the area where we should watch to see if there's going to be this wave of defaults on loans rather than home loans, which was the centre of the 2008 crisis. Now there are other areas that are more worrying for the banks, and essentially what they're doing by setting aside this money is to try and prepare for the worst, that if households find themselves unable to pay debts because they've lost their job or other complications in their personal finances before the end of the year, they're expecting this situation to get worse.